Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I was going through the comments section. I've gotten a couple of questions here on what are your thoughts on Evergrande's collapse and its effect on global real estate and commodities markets. I don't think it's going to have much of an impact. I do realize it's somewhat big company, but hopefully it's contained. But usually if you're going to see a collapses, how can I say this? They usually start in the real estate market in America. The when things get priced in dollars, a lot of things get priced in dollars. Commodities are priced in dollars. Oil's priced in dollars. Everything's dollars, 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 dollars. And really, what you have is you have the two components again. You go back to the two components, and it has an inflationary component in commodities, and also you got the supply and demand. So when the dollar goes down, it pushes the pricing of commodities up, which means you're in an inflationary environment. In an inflationary environment, what it also does is it directs money to different areas because of interest rates. So other countries are going to buy commodities because they're not going to recycle their money in losing bonds. If we go into a very large, we'll call it paradigm changing secular bull market in interest rates going up, not bonds going up, interest rates going up. That's going to put bonds in a bear market for a very long time. If they go in a huge bear market, countries are not going to be buying bonds because they're losing purchasing power. They're going to prefer to buy commodities. They're going to redirect that money to somewhere else. That's what we've seen in the past, and that's probably what we're going to see in the future. So you get a twofold increase. You get the inflationary aspect of gold rising up, and then people in countries preferring to buy commodities over bonds and stocks. If we were to see this Evergrande collapse and people thought it was going to be a huge blowout crash, we would be seeing people running to bonds for safety. And then you'd see yields going down on the 10-year. We don't see that. We're seeing yields go up at the moment, at least yesterday, in the short term. So seeing yields go up means to me that people are selling bonds and they're not worried about this Evergrande collapse. That's what I would see from it. You would also see copper really starting to head lower, and maybe we'll see that. That's something that we'll have to continue to monitor. But I don't think it's going to have the impact. But you never know. You never know. Looking at. Wanted to give you a big thank you to whoever it was that mentioned Peninsula a few months ago. And he picked up on your comments and looked at the charts and said that there was not enough history on it. I looked it up, saw that it was a developer and that it hadn't moved in price and jumped in. Increase of so far 156%. So thank you, and thanks, Andy. This is life-changing stuff for me. So that's good. Hi, Henry. I believe that was me. Discovered Andy's channel last year, and his channel is the first ever channel for me to subscribe to. Love the fact that Andy wants to help others to achieve financial freedom. Thanks again. And engage with his followers. Hope you get a great ride with your stocks, and remember to not sell, easily sell. So coming on down, I'm just answering some of your guys' questions. We have a lot of uranium guys, and guys, uranium's an incredible sector. I really like uranium. I think it's going to do incredibly well. This guy says, when the price of avocados in the grocery store go on sale, I like to load up. More questions. Let me see here. So love the videos, not going back to precious metals until a market crash happens. I've been through a year of flash crashes and 6:40 a.m. contract unloads. I see that as well. And I don't. So what they do is they have a bunch of continuous contracts, the quote manipulators do. And then they just literally dump it all on the market before open. And it's like, it's pretty repeatable if you watch it. And it doesn't make any sense to me. It's like, why would someone do that unless they wanted to push the price down? Otherwise, you wouldn't do that. You would spread it out amongst the day. You wouldn't do it in a pre-market type fashion. I mean, to me, that's pure, they're doing this on purpose. I mean, it's quite obvious. I got my precious metal investments out a few months ago to increase his uranium positions. When talking about probabilities, why would you want to be betting against a banking cartel? I'd rather be on the manipulator side of the trade. So he's saying, he's avoiding PMs because of that. A lot of people talk about the spoofing that's going on with the precious metals markets. Is investing in the Sprott Uranium Fund a good long-term play for a non-trader guy? Yes, it is. It's the least risk way to play the uranium sector is to just buy the physical Sprott fund. It reduces your risk, and you get pretty good upside. Now, the downside is you're not like leveraged up. Some of these uranium mining companies, when the price moves, they move quite substantially. So you could see 100% price move in uranium, and the uranium mining companies may go up some hundreds of percents. So you're taking on more risk for that leverage. So the trust, though, it does go out. It does take physical off the market. So what happens is you get this we'll call it a feedback loop where you put money into it, it buys physical, takes it off the market, and then positively reinforces higher prices because you continually take off out of the market more physical pounds. And that's what drives the price higher, is that demand for physical pounds. A lot of people talk about the lower metals. It's up 100% since last August. Seems overlooked until recently. So that is one. I don't know much about it. VALORE, Valor Metals. But I do see some people talking about it in the comment section. So that might be one that people want to look into. Again, I don't know much about that one. Says, wish I had fiat dollar every time someone uttered the phrase buying opportunity in regards to metals. I still like the metals, guys. Physical platinum, I like that a lot. I'm not as big into the companies just because they're all in a lot of them are in South Africa, and their production's probably going to decline. They could probably still make more money, but I really like the physical. It's by far the least risk way to play it. Another one, now that we're talking about platinum a little bit, Siboney Stillwater also produces quite an array of products that are going to be in good demand. So that might be one to look into as well. I think it's SBSW. So if you guys are looking for a company that kind of does a lot of everything, platinum, I think it even has uranium and some other strategic metals, that might be one to look into. Siboney Stillwater. Thoughts on CCJ stuck in contracts, having to buy spot while it's being squeezed up and not having any mines active? That doesn't seem like a good spot for them, but I don't think it necessarily hurts them or helps them unless their contracts are below the price of uranium. Then they're going to be losing money. So we'll see what happens. Yeah, I made the comment, little Banny, little Bannerman. I'm adding on the dips, such as today, to my existing positions, including Canalaska, Uranium Royalty Corp, Forcis, Baseload. Long-term looks bright, got to wear some shades. It says this is a pause, not much of a dip. CVV didn't even dip. So, yeah, pretty crazy how strong some of these companies have been. So it says, Andy, can you explain what is meant by the RSI and how this is an indicator of the overbought, oversold condition? So RSI is relative strength indicator. It shows strength in volume and direction. I'm reading the one below it, which is true of the movement. If you see over 70%, this is usually overbought, and 30% is oversold. It is a chart indicator for stocks. They usually put that at the top of stock charts if you're looking at stock charts. When things go into usually when it goes above 50 and it's trending higher, they consider it to be in a strong move, a strong move. So some people use RSI to purchase and sell stocks. I don't use RSI. You could use it for a trend. So you could see that the RSI was trending lower. You wouldn't be buying it. You kind of draw a downtrend line. And when that RSI breaks the downtrend, you could say that something's changed and that the strength of the stock could be increasing. I kind of do, I look at that through the price chart without even really looking at the RSI. And some of these companies, when you start getting into squeezes, they'll go up into the RSI will go way up there above 70 even, and stay above 70, kind of just maxing out. It's like you're racing a car, you're pegging the RPM, but you're up there the entire time, just going as volume just comes in, money flow comes in and just pegs the RSI meter, kind of like you would be pegging it racing in a car. So is it a huge indicator? No, I don't really use it at all, to be honest. You could kind of look at it and say, yeah, it broke the downtrend, it's probably going to move on up, but I don't use it for very much. Some people rely very heavily on it. So that's just differences between people. It doesn't mean I'm right, doesn't mean they're wrong. You kind of latch onto things that you think work and that have made you money in the past. And remember, I'm an investor. I'm not a short-term trader. So some of these guys may use the RSI more so for trading than you would in a long-term type mindset. So my mindset, I don't really look at it and be like, man, I really got to buy the stock. The RSI is increasing. I don't even look at it. I look for stuff that's way down there. And I may buy something that's really low and the RSI would look really bad. But since it's let's say it's a physical metal, like physical platinum, I'm trying to buy at the bottom of the bottom. I don't really care what the RSI says. I'm looking at chart patterns. I'm looking at things where we could see a bounce higher. So that's where I'm looking at. So there's some people that are pretty discouraged in the precious metals area. Yesterday's price action was a little bit weird. We had this nice, good buying pressure up, and then it just punched lower. It's like, really, guys? That's not manipulated? Maybe it's not, but yeah, I don't know. Got me a little ticked off too, because they sold it off. They gapped it lower pre-market, gapped it lower, and then it went down, and then buyers came in and bought it all back up. That's why there was a big wick at the bottom. So it's rare to see a nice, good buying pressure move, and then it just pops lower and then comes back up. It's like if it popped lower, you'd see selling pressure throughout the day. It just doesn't come right back on up with buyers. It's like somebody pushed it lower and then bought it all back up. Yep. Just looking for some more questions. Yeah, I'm not seeing too much. It says I'm seeing some pretty strong looking support on platinum around $900. I don't know if it's going to get down there, but I think platinum is a very good deal in these low $900 area for sure. Looking on the weekly chart of COPX, would you say it's a bearish momentum? No, I don't think it's bearish momentum. I think we could potentially break to the upside. We're carving out a chart pattern. I did a video on COPX, and we just need to see it break to the upside. Once it breaks, I think it's good to go. By the way, did you see REEMF's move yesterday? It was massive. It was up like 20, 30% in a day, 36%. Do you think it's sustainable? Not exactly sure, but I'll tell you this. They're a rare earth metal. When rare earths go, sometimes they go. I mean, they can move dramatically. There was some very good performers last bull market in the 2011 top. So rare earths, I think, are a good spot to be. It's, just what I do is I buy some. I'm holding on. We'll see where they go. And I think that's one of the spots that you got to have a little bit of money in. When I look at some of these investments, I think uranium, oil, natural gas, those energy type investments, they're going to have a lot of leverage and they're going to move a lot. Looking at some of the other stuff behind it, I think rare earth metals could also be as leveraged or more even than the energy sector. If you look at some of the old price performance of like neodymium and stuff, oh my goodness, it makes gold and silver look like it didn't even move last bull market. It was like gold and silver, neodymium, boom. It's like, oh my goodness. So yeah, I got some money in there. It could be a huge sector that just blows up when we try to build a lot more electric vehicles. And I think we're going that direction with electric vehicles. Therefore, I'm in the rare earth metals. I think that's a really good spot to be. I'm going to cut it off here. Thanks guys for all the comments. I really appreciate your guys' comments and allowing me to read them. They've been very clean, so thank you for having clean comments. People aren't fighting with each other in the comment section, so that's really good. So if you guys like this content, subscribe to the channel. I don't know what you're waiting for. Give me a thumbs up, and thank you for listening. This is Finding Value.